Welcome to the Real Estate Investor Podcast. I'm your host, Gary Lipsky of Break of Day Capital. I talk to leading experts to discuss a wide range of subjects to educate investors on best-in-class practices to build legacy wealth and positively impact communities. Let's jump in. Hey everyone, welcome to another episode of the Real Estate Investor Podcast. I'm your host, Gary Lipsky with Break of Day Capital. Be sure to join our Facebook group, Asset Management Mastery, where we have a great community of thousands of like-minded individuals sharing resources and best practices. Hey everyone, we have launched the BODC Multifamily Impact Fund. Invest with a trusted operator with a track record of success. Our fund offers diversification, risk mitigation, tax benefits, and stringent acquisition criteria. If you'd like to learn more, head over to our website at breakofdaycapital.com.
Choosing the right insurance coverage for multifamily properties isn't that complicated if you know who to talk to. At the Garzella Group, we're uniquely qualified to help you navigate the range of policy choices you have, and we're committed to saving you 30% in the process. We do intensive market research and have nationwide relationships, so we can find coverage other insurance brokers simply can't. We should talk. Go to quotenow.biz and we'll start the conversation.
Today on the podcast, we have an old friend of mine, Shane Thomas. Shane is a co-founder of Catalyst Equity Partners, who purchases value-add multifamily properties, currently has a little over 1,900 units and over 300 million assets under management. He is also the co-founder of CEP Construction Services, a multifamily construction and rehab company, and is a CPA. Thanks for joining us, Shane. Can you start by telling the listeners a little bit more about yourself and what you do?
Yeah. Hey, Gary. Thanks for having me on, and excited to be here and reconnect with you. So thanks for the nice introduction. To add to that, yeah, we're, Texas based. I'm here in Houston. So me and my partner, Prashant, founded Catalyst in 2016. And we've been primarily focused in Texas multifamily. Our portfolio spans between Houston and Dallas. We started in the business buying, what I would say is like vintage workforce housing, 1960s, 1970s properties. And when cap rates started compressing, we kind of started going up the food chain. And so we've got, a couple of deals that are 2000s vintage, 2015 vintage. So we're acquisition only. We haven't done any development, but we are, pretty much up and down, class C to A. We've got construction management in-house. We also recently, I would say not recently, but maybe a year and a half ago, started doing third-party construction management services. We've got a small team of 7 employees, asset management. The only thing that's not really in-house is property management. And yeah, this is what we do full time. On the side, we invest as LPs in different asset classes, and we've got a few other investments in some operating businesses. But our main focus and bread and butter is multifamily acquisitions and asset management.
You mentioned construction and property management, which you don't do in-house. That's one of the biggest questions I get all the time. People ask me, why haven't I started one? Will I start one? And my answer is heck no. I'm curious what your thoughts are on that.
Honestly, it's a question that we debate quarterly, like internally, not debate, but just discuss, right? It's I think there are pros and cons like anything. And so, historically, I've always been like, hey, you need to be at some type of scale for that to make sense. And I think, in a lot of ways, you do need that scale from a cost perspective, hiring the right folks and whatnot. But then in other ways, I'm thinking, hey, maybe if you're smaller, you can start with 1 or 2 properties, kind of learn, and so I don't think there's a right answer. I think it really depends on what your goals are. Right. And so, I talk to a lot of guys that have been in the business 15, 20 years that all have management companies, and, they're like, look, 15 years ago, there weren't that many great third-party property management companies, and we were almost forced to, and then their advice now would be, hey, a lot of them would say, hey, I wouldn't do it. I would just, hire as many people as you can to manage the management company. It's tough work, and it's kind of a thankless job. Then there's others that are like, you swear by it, right? Where, I'm sure, Gary, you've experienced this, right? Like, you're going neck and neck, try to win a deal. And, the competitor has their own vertically integrated property management company, and their, costs are 20% lower, right? Because they could control the controllables better than we can with third party in some cases, And so I think for us, we've always looked at it as, it's, when is the right time and what resources are we going to put around it? So I don't have an answer for you. I think I see it both ways. And look, there's certain days and certain months where you're frustrated with your asset management calls and you're like, man, we just got to bring this in house, And then there's certain times you're like, you know what, like we're doing everything we can to manage and oversee. And so yeah, the jury's still out. But I think, if you want to be like, a full term, multifamily, you plan to get to 15, 20, 25,000 units, I think it's inevitable. We're at the, 2,000 unit mark, and I think, it could go either way.
Yeah. For me, I want to stay more nimble. I don't see us growing past a few thousand units. And so it allows us to kind of focus on what we do best. And even if we had it in-house, doesn't mean I'm still going to have the same people problems, but yeah, if we can have a property management company that's a 7, maybe an 8 out of 10, and we can manage to their weaknesses.
Yes.
That's my goal.
Yes.
That's what I try to achieve.
Yeah. No, I think that's a great strategy. And that's similar to our strategy right now, right? Like we're just I look at us as more of an augmentation to where the property management is suffering, and we step up there. So no, I think we're aligned.
So you started CEP Construction. Talk about when you started it, why, maybe the pros and cons.
Yeah.
It's kind of similar to the property management piece,
Yeah. This one was, so as you know, Gary, I mean, we bought some older, heavy lift deals in the past, and when we first started, it was get a general contractor, and these were smaller budgets back then, 300,000, 800,000 and whatnot to do a full transformation on properties in 2016, 2017. So we really got our hands dirty, rolled up our sleeves, learned a lot. And quite frankly, we enjoy the construction management aspect of it. We love that true value add deals. We love transforming communities. And so, in 2020, when we started buying some deals at scale, we had multiple deals under contract, and, these were like, real value add deals where, we could raise rents $250, $300, and we had multiple of them, and these were multi-million-dollar projects, right? Like $2 million projects per deal. And I think we had 3 going at the time. And so at that time, it was like, okay, execution was everything, right? And to add to that, we had these sized well for floating rate bridge loans. And there's a time and place for those, which we may discuss later, right? But you have to execute, right? And so our earlier deals, we had, stabilized deals. We weren't like on a time crunch, if you will, right? And these deals, it was like you had to do 8 units a month per deal, do your exterior, And so at that time, we're like, you know what? We need to really bring this in-house, right? Control the costs, control a lot of the variables, right? And so at that time, we just brought it in-house, hired a construction manager, a few project managers, and we saw the ability to execute fast, right? Because it was all internal. Then we started buying in bulk and whatnot. So that really, from 2020 to 2022, we were able to execute our business plans so much more efficiently and effectively than what we were doing in the past with GCs, right? So that kind of was the impetus to starting the construction side of the house. And then, from that, a lot of our network and peers, especially in Texas, would ask us, hey, who did you guys use for X, Y, and Z, right? And before it was like, hey, we use X, Y, and Z contractor. And then from there, we started doing projects externally for folks, small projects, one-off projects. And then our management company, which is one of the largest management companies in the country, right? We have over 1,000 units in Houston with them. They saw us doing renovations on the properties they manage for us. And then their regional managers would start talking. And then we got business from the management company, And so it just kind of, just happened, and then we decided to say, you know what, this would be a good business to augment to our current portfolio. We've got like a director of business development, we've got a construction manager. So we treat it totally separately. And yeah, I mean, it's been a good journey. We're, the way that we are thinking about it is that we're owners first, right? So a lot of construction folks in the business don't understand the intricacies with the drop process and having to pre-fund it. We understand all that because we do that. We've done that for 8 years. So I think a lot of our clients are like, okay, these guys get it. They know how to manage these projects, because they're also owners. And so it's been good. I mean, obviously, as we know, the last 18 months has been slow, and, construction is a transactional type of business. So the construction activity has slowed, but we've been able to stay busy and optimistic we've got a good pipeline for the future.
Nice. Yeah, I love what you did there. Yeah, if anything, I would go that route so that it like you said, that execution on the business plan on the construction side, that's those costs of subcontractors and whatnot can really run up a cost and like you said, take time. So yeah, I'm really impressed by what you're doing there. We kind of alluded to like the last 18 months, and obviously asset management has gotten a lot harder to push rents. Probably, for a lot of properties, we've seen rents go down. We're not able to, or it's not paying off to renovate units anymore. There's very cost sensitive for the resident. Talk about some of your biggest struggles you've had of late for asset management.
Yeah. No, I think asset management is near and dear to our heart, and I know it is to you, Gary, as well. And quite frankly, there's guys like yourself and us in 2016, 2017. We were taking asset management seriously from day one, right? And not to say others weren't, but I think it was more of the for a lot of folks, it was the excitement of getting the deal and tossing the keys to the property management company, right? And the reality is, at that time, we had a lot of wind at our back, right? Like cap rates were decreasing, rents were skyrocketing. And so asset management was not in focus, right? Whereas now, it's a lot of things everything is, wind at your face, and so, we don't have the margins or the room for error like we did pre-2020, right? I would say the last 18 months has been the most challenging period since I started in 2015. And so, I think asset management, look, the reality is like, you can, have the best asset management in the world, right? And which is what we strive for. But I mean, if your underwriting upfront is not, reflective of reality, it's going to be hard to kind of, work your way out. You can incrementally improve, but like, I think it really starts with like, how did you size this deal up front, right? That said, asset management can kind of help you from, faltering, right? And so, right now, I mean, we're literally, every week, multiple calls and trying to be creative. Because like you said, Gary, I mean, supply is up right now. And in the future, everyone's expecting supply to decrease. But, there's competition for everything, right? Like we're losing tenants for, somebody giving away like a free week of rent, and tenants are concession hopping. And so we got to be creative, right? Like, we were reviewing a deal yesterday where we have like 16 notice to vacates, and we're like, look, our front door, we're offering a great concession for people to stay. Why don't we just offer it to the folks that are leaving right now, just to keep them there, right? We know that they've paid well for at least 12 months, and so we're going to employ that strategy. And it's really, we've always looked at every contract and whatnot, right? But it is like peeling that onion several layers deep, because everyone knows the name of the game, right? I mean, every dollar counts towards NOI. And, in some cases, we literally are having conversations on one property about, some G&A expenses. And, there's a line about some coffee machine, right? And, talking to the property manager, and it's like a couple $100 a month or whatnot. But like, she's like, I mean, that thing leases. And I can tell you with experience, like it's one of the best coffees I've had ever at a property, And so but anyway, I mean, just long story short, I mean, we're looking at every single contract. We're being proactive with lenders, our asset management has been busier than ever. But certain things we've just kind of doubled down on in terms of improving back office processes. But, we've always had the mindset that communication in good times or bad, we want to over communicate, right? Whereas a lot of folks right now either are going dark or all of a sudden are picking up their communication because things are tough. I mean, we've given out monthly reports to our investors, every deal without fail since inception. And we've got some deals that we've owned for 6 or 7 years to this day, and so we keep investors informed. And, we're trying to be as proactive as possible in all regards. So yeah, I could dive into some specific examples, but like high level, it is really keeping your pulse on the market. We recently so we have a senior asset manager who's great. We recently even hired a former vice president of operations at a third-party management company to join us to really have that boots on the ground knowledge, right? So now we have our financial acumen with our asset manager. We have the operations acumen. And to go back to our earlier point, right, really building the team so that nothing slips through the cracks on the property management side.
And I think that's one of the biggest areas that these smaller kind of newer syndicators over the last, 5 to 10 years failed to do. And I've had people come up to me like, how are you scaling your team? How are you growing your team when you're not, like, if you don't have lots of sales or whatnot, you're not doing tons of deals, how do you afford it? And I'm like, well, I'm losing money every month, but I'm playing for the long game. You have to invest in a good team because you can't do it all. And like we said, like asset management is a lot harder. It's not like we're not growing 10% in rent growth every year now, and expenses are getting bigger. So talk about scaling your team and playing for the long haul when there is a big cost to that, and you're not going to get it in your asset management fees. And even the acquisition fees doesn't cover it. It's really selling a deal eventually at a really nice profit.
Yeah. No, and I think that is kind of one of the biggest questions in business, right? Like, do you have a business or do you have a job, right? And so, when we first started, like we all did, right? I mean, everyone has a vision and a goal, but you're starting, you wear all hats, right? I mean, we were doing everything, me and Prashant, since 2016, every single role at our company we've played, right? And, it is an investment, and, it is scary, especially in the beginning, right? And so after, I think it was about 2.5 or 3 years, we were like, okay, we got to get an assistant, and that was at the time, it was like, whoa, like, do we have the wherewithal to be able to do this, and what, we hired our assistant, and then we started hiring our senior asset manager. And then what we realized is that, we were able to get more done. Right. And so, me and Prashant, I mean, we did one deal a year for the first 4 years, and that was great. I mean, we learned a lot and I have no regrets. But then once we started scaling the team, we were able to get 3 deals done in a year, and then another 3 deals done in a year, and so I think it's really hard. It really depends on the maturity of your business, right? But at a certain point, you have to kind of have the conviction, right? Like to your point right now, right? Like things have been slow, but we're net hiring, right? Because we know things are going to turn, right? So you're making an investment now for future expectation of, return, right? But yeah, I think it's one of those things that you just got to start and leverage your time. And I mean, I surround myself with folks like yourself, right, that are business owners that are having the same challenges, and so yeah, I don't think there's one answer, but I would just say if I had to do anything again, going back, I would say I would hire sooner and faster, and that really kind of, and look, there's times like this, even now you're kind of like, okay, we're waiting for, stuff to pick up, right? But you just got to think long term, right? I mean, in real estate, I think the challenge that a lot of folks had, whether it's GPs or LPs, is like everyone got to the 2x, and not everyone got used to, but like it became like a norm, short-term norm, to 2x in 2 years, right? But our intent was never that. Real estate was always long-term and 5, 6, 7 years, right? And I think if we put those hats back on and have that mindset, you'll start seeing that, hey, I gotta start building my team to be able to hold these deals 5, 6, 7 years. And so that's what we've done. We've been prudent. And similar to you, Gary, I think we've kind of had similar paths. There's a lot of guys that I think, there's, some people will argue against this, but like, there is a cost potentially for going too fast, right? Like we've seen a lot of guys go really, really fast and crash and burn, and obviously there's a big cost for not moving at all. So we've been, cautious, but I would say, aggressive where needed.
Yeah, I love you. Same philosophies. Sooner, faster. I totally agree. Yeah, I think we've always had the same mindset for the most part. And you had a CPA background, which I thought was really beneficial coming into multifamily and really analyzing the financials and stuff like that. Where I think people is a common mistake. They don't dive deep enough into it. And I've had regional managers say, we never have operators kind of dive in. And it's like, that's still a major part. So talk about that advantage for you, particularly when you started to have that, background.
Yeah. So the CPA, I would say, definitely gives you the toolkit to kind of help on the financial side, right? So that was one of the areas where I would say I added a lot of value, especially in the beginning, right? And so, it's basically the backbone of business, right? And to your point, property management companies, I mean, they, for the most part do a good job, but they're just really preparing the financial statements, right? Based on things that are coming in. And then they're, lack of a better term, flipping it over the fence, and to your point, a lot of folks on the sponsorship side didn't understand how to really dive deep and question, right? And so for the first 3 or 4 years, I was the first reviewer, right? I mean, I would dig into all the invoices, make sure things were reconciled, looked at our cash flow statement, right? Because P&L tells you one thing, but as this is a very capital intensive business and there's a lot of cash in and out. And the P&L doesn't tell you that. You got to go to the cash flow statement, look at your balance sheet, right? So we were doing all that. And I think that that definitely helped, and it gave us more confidence in the ability to, have confidence behind our numbers. But then going back to the topic we just discussed, at a certain point, every month, I was the bottleneck, right? I was losing 1 week a month, reviewing financials, getting on the call, doing the adjustments with the property management, and preparing the monthly reports, right? And so we got to a stage where it was like, okay, this is probably not the best use of Shane's time for a catalyst to grow. So now we've got, basically a part-time CFO that literally reviews all of our financials, basically does what I used to do, but that CFO is a CPA and does this day in and day out, right? I hadn't done accounting work in a lot of time, right? So anyway, we always try to hire experts, right? So we can get better. And that's how we've kind of positioned it now. And, we do detailed distribution analysis, detailed like treasury function, cash management, stuff that, property management companies can't do or shouldn't be expected to do, quite frankly, so.
Well, Shane, thank you for coming on the podcast and sharing your wealth of knowledge. Always impressed with what you and Prashant have done. Tell the listeners where they can find out more about you and your company.
Yeah. We're active on LinkedIn, so you could connect with me on LinkedIn, Shane Thomas, Catalyst Equity Partners. You could also visit our website. It's CAT Equity, CAT equity.com. And then I'd be happy to chat with anyone. Just send me an email at Shane, SHANE @catequity.com.
All right. Thanks so much. This is Gary Lipsky signing off. I'll be back next week with another informative episode on the Real Estate Investor Podcast. To all of our listeners, thanks for joining us. And if you like this episode, please head over to iTunes or Stitcher and subscribe, and leave a review, as it will help us reach more people. And if you'd like to learn more about what we do at Break of Day Capital, head over to our website at breakofdaycapital.com and sign up for our newsletter and fill out our investor application. We'll talk to you next week.